JJ the CPA here. I want to talk to you about the employee retention credit. And this one is phenomenal. I mean, this is going to be huge. The biggest reasons that it is going to be a let's see. JJ the CPA here. Hope you're doing well. I'm going to try and contain my enthusiasm and excitement, and that is no sarcasm, on the employee retention credit coming out of this stimulus. It is unbelievable. The biggest reason it's unbelievable, awesome, is that we now can take advantage of it even if we got PPP 1 or if we get PPP 2, meaning we used to not be able to take the employee retention credit if we got PPP. They completely took that off the table. So now anyone can take the employee retention credit, assuming they meet the other conditions. The first thing I'm going to note to you, though, is the employee retention credit is not available for the owners of an S Corp, a C Corp, or the partners of a partnership. It's not available to the self-employed that file a Schedule C or an E or an F, and it's not available for household employees. What is the credit? You're not going to even believe this. I have a whiteboard I'm going to pull over to show you, because the credit is 70% of qualified wages up to $10,000 of wages per quarter. Used to be 50% and $10,000 a year. So this is literally qualified wages paid up to $10,000 in a quarter per employee times 70%, and that is the employee retention tax credit. And with that, it in essence is a refundable credit. So whatever your credit is, you're going to get that money back. Now, it's retroactive. This is the other mind bender. Retroactive back to March 13th. So any wages that you paid March 13th and after potentially qualify. Now, there's two qualifications. The one I'm going to focus in on this video is you get the credit for the time period that you are paying wages when you have been shut down by the government. So if you are in a state, just to go to the extreme, and there never was a shutdown in any way, shape, or form, then you wouldn't qualify for this credit. Now, you might be in a city or a county or a state that had a shutdown that could have been different from another city or another county or another state. So the biggest thing that you want to wrap your arms around here is what were the exact dates that your government had a shutdown. And so there is some determinations of that would really be broad, probably for some. You'll have to walk through that. Here's the other thing that'll really literally blow your mind on it, is that if you have 100 or fewer employees, you don't even have to be closed down to take advantage of this tax credit. So you could have been open, you could have been closed, partially open. Your employees could have been working or not. Basically, if you're 100 employees or less, you get this credit. You just get it during the time that wages were paid while there was a government shutdown. Now, if you're over 100 employees, then you get the credit for the time period that your employees were not working, but you paid them. A couple of things to note. I'm going to put a link in the body of this for those of you that want to deep dive into it. There's the Form 7200, and that is what you complete. It's pretty straightforward, and you fax it to the IRS. Now, let me be clear that this hasn't been signed into law as of December 23rd, I guess is now, just past 1 a.m. So do make sure that this has been signed into law, because that is then when you want to be able to send the fax into the IRS. So get started on this now. have your Form 7200 ready to go. The IRS will update its website, it'll update its instructions, but there really won't be a need for the form to be updated. You won't need to wait, in my opinion, on the Form 7200 to be updated. All you're going to wait on is that this gets signed into law and then fax it in. I already have mine ready to go for my firm. I'm now just going to wait until it's signed, and then I'll fax it into the IRS. It's the only way, actually, believe it or not, to file it. One of the things to note here is that this credit cannot be used on the same payroll if you're getting any other kind of tax credit on the payroll. What's that mean? Well, pick the dollar that was paid to the employee, that $1, okay? You have to pick what credit you want to use that dollar with. So you couldn't pay an employee and then go, oh, they qualify for this credit for work opportunity. Oh, they qualify for this sick leave credit. Oh, and they qualify for the employee retention credit, and it all be on the same dollar paid to the employee. Point is that you can't overlap it on the same payroll. So check out the instructions. I'm going to give you a link to the IRS website. There's over 90 FAQs. They give you a ton of information. But at the end of the day, the biggest news here is that it's retroactive and you can take advantage of it even if you got PPP. It's up to 70% of $10,000 of qualified payroll per employee per quarter. It is huge. Now, you also do qualify for this if your revenues are down, but here's the deal. You're going to need to wait, in my opinion, to deep dive into that one if you're in those circumstances, and I'm going to give you the link to that. That'll just really lengthen this video. I will have another video at some point walking through that provision, because you can take the employee retention credit on wages paid while you're shut down, okay, opened or closed, but those provisions. And then you also can take the employee retention credit if your gross income has dropped. That one's a more complicated calculation. All right, so I'm going to bring this over. Pretty exciting. We'll go through it fairly quickly, I hope. And what we're talking about here is the employee retention credit. What's red is new. Once this gets signed into play, it'll be $7,000 tax credit per employee. That's huge. It's based on gross wages paid up to $10,000 of wages per employee per quarter. So here's an example. You got Jimmy that was paid $13,000 for the quarter. The max wages that count for the quarter is $10,000. So the tax credit's $7,000, 70%. We've got Clark that was paid $7,000. Well, the max wages that count is either $10,000 or what was actually paid, the lesser of. So $7,000 is qualified. $7,000 times 70% is $4,900. So for the quarter, there's a tax credit of $11,900, and then you would start over for the next quarter. You'll use Form 7200, and you will report and submit a Form 7200 quarter by quarter. So if you are somebody and you're going to have tax credits that are over multiple quarters, you will fill out a Form 7200 for each quarter, submit each Form 7200 separately. Also, you'll notice that Form 7200 currently only shows second, third, and fourth quarter, but the instructions indicate that if you have any tax credits in first quarter, so that'd be March 13th through March 31st, you report it on the second quarter Form 7200. So in closing, what I would say is, if you've got credits in all four quarters, you should be handing in the 4 quarters of the Form 7200. You'd have 2, in my opinion, that would be filed for quarter 2. You'd have 1 for quarter 3 and 1 for quarter 4. Now, don't file any of these until we know the law has been passed, but guess what? Get them prepared. So any FAQs that you've got, check the website, the link that I'm giving you. It has the instructions, it has the forms, it has all the information directly from the source, which is the IRS. So like I said, I've got my Form 7200s ready, just waiting for the law to pass. All right, hey, hopefully this was massively helpful to you. I do want to mention to you, I'm doing several seminars. Go to my website, jjthecpa.com. Go to the seminars page. I've got 4 live seminars. Why go to a seminar, JJ, when we can watch your videos here on YouTube? Well, I appreciate that. The seminars will be PowerPoint driven, full encompassing. You'll get a copy of the PDF version of the PowerPoint with worksheets. And in a Zoom setting, I'm able to be full encompassing as a CPA. I'm able to be more comfortable in ensuring that I'm delivering all of the information to you. And I'll do 1 hour of live Q&A after each different kind of seminar. I have 4 different kinds of seminars. And you will find a link where you can sign up for them. Each seminar, each of the 4, I'm just doing it on one date. That's it. So check it out. There's limited spots because it is a Zoom. All right. Hey, I always forget to ask, but if you've made it to here and you haven't subscribed, please do so. I know I've created some major value here, and I would love it and be honored. And then for those of you that are subscribers, please turn on your notifications. That way you'll know when a video has dropped. Lots to come. Stay tuned. All right. Don't you ever forget, you've never met a CPA quite like me. All right. Have a great one.